Assalamu alaikum friends, how are you all? So today we are going to start with MA, the Management Accounting paper. I'm going to do the full exam also and also the extra multiple choice questions. Okay, the MTQs. I have previously done a paper on business and technology, so if you haven't checked it out, please do go check it out. For the ones who are planning to give F1 or business and technology too, okay, alongside with management accounting. So let us start. And on the right side, you can see answers are given, so you can check the answers. But this will be beneficial for those students who does not have access to it or who is just wanted to start management accounting, who does not have any idea, does not have the resources, the textbook and revision kit, who is thinking what are the things there, what is the content, how the exam will be. So it will be helpful for those students to decide after seeing this video whether they actually want to take management accounting or not, or want to take SSC or not. Okay, so it will be helpful for those students because usually the ones who have access, they have the in the ECCA website, when they're doing this paper, definitely answers are there, so for them it won't be a problem. But it is for those who does not have access. Okay, it will be helpful. And the time is 2 hours. It will be on your screen, and the pass mark is 50%. Okay, section A has 35 questions worth 2 marks, and section B has 3 questions worth 10 marks. Okay, so 70 and 30. So let's start. So these are all the instructions which I don't have to read it because I know. Now let's start the exam. So your first question, okay, as you can see, the marks will be given here and you can see whether it's correct or not. If it's correct, a tick mark will be there and the time remaining is here, and here you can see how much you have progressed. Okay, it should be 100% before you exit the exam. And the first 3 papers in ACC are all 100% multiple choice questions. Okay, you don't have to write anything, you just have to select an answer. So first one, a manufacturing company benchmarks the performance of its account receivable department with that of a leading credit card company. Which type of benchmarking is this the company is using? You should know all these are benchmarking, but for this, what is it? Is it functional benchmarking? It is strategic? Is it competitive? Or is it internal? It is functional benchmarking. Why functional benchmarking? I'll explain you the reasons also. Okay. The company is using functional benchmarking as it is comparing an internal function to a similar function in another company. What is the function? The function is the account receivable department. Okay. Performance of accounts receivable department. So this they are comparing with another company. Okay. But same function. Okay. Even though the two companies operate in a different industry sector, but the function is same. So that's why it is functional benchmarking. That is known as functional benchmarking. Next, which of the best describes target costing? So management accounting is all this: benchmarking, target costing, budgets, all those things. Okay, and we do have calculations in management accounting and financial accounting, not like your accounting in business and technology. Not like F1, F2, and F3 does has calculations. Okay, so which of the best discuss target costing? Setting a cost by subtracting a desired profit margin from competitive market price, setting a price by adding a desired profit margin to a production cost, setting a cost for the using calculation of variance, setting up selling price for the company to aim for in the long run. Where is it? Okay, it has, since it is target costing. Okay, so definitely it says that it has nothing to do with selling price or the price. So the second and the fourth option are out. Okay, whenever you are confused with the right answer, try to eliminate the wrong answers. It will lead you to a correct answer. Okay, because just minimize the options. So second and fourth is out. Definitely it is about cost. Okay, so setting a cost for the using calculate a variance or by subtracting desired profit margin from a competitive market price. Target costing. Target costing means you are targeting a cost. You want to set a cost. How do you set cost? Just go back. Subtracting a desired profit margin from a competitive market price. So we know that with a price. Whenever there's a price, we set a profit margin. Okay, that's how we put a price, right? Selling price. But the cost, when you have to deduct the profit margin from the competitive market price. Hence, it is target costing. So it is the first one. Okay, it's not for in the use of calculation of variances. No. So understand. So these are the concepts you have to understand. You will be learning it more when you are doing management accounting. Okay. But definitely the reasons and all you don't have to give, but you have to know to select the right answer. And here you can see there's a tick mark and you are given 2 marks. If it's an incorrect answer, you can see. But in the main exam, you will not be, it's not like this. You will immediately not know whether it's correct or wrong. After when you submit the exam only, you will get the results. Okay. That's why this paper you can do multiple times. Coming to this. This is something which could be complicated, okay, because working is required. So information relating to the two process F and G were as follows. You have been given the normal loss, the input, the output, and for each process was there an abnormal loss or an abnormal gain. Okay, this is process costing. In process costing, we have abnormal gain also, we have abnormal loss also. Okay, so definitely let's start with process F. Okay, for this you have to be very good in process costing. This says that process costing will come. Okay, and process costing is a little an area which is not liked by many students, right? Let me be honest with you. We all on that. Okay, I don't want to promote that. Okay, this is easy. This is no, but it's not something which cannot be done. Okay, because there are so many processes and all those things around. So me, rather than just giving answer, write an answer that anyway you can do, let me explain you how you get it. Okay, so starting with process F, it is this. Okay, forget about process G, just look at F. How are you going to get the expected output? How did they get this 58,900? It is just 8%. 8% normal loss means 92% into 65,000. Okay, so 92% into 65,000 is 59,800. Just take 92% because 8% loss. Okay, so 92% on 65,000, it will be 59,800. Okay, so it is supposed to be 59,800, but the output later is 58,900. It is less. Okay, it is less. 900 less. So abnormal loss. Output should be more. Then only it will be a gain. But here it's loss. Here it's less. That's why it's a loss. Because when you're taking 92% of 65,000, it should be more than this. But this is less, so it's a loss. Okay. Now the same way you have to do for G. Okay, definitely I cannot show here on the screen, but you can take the calculator and just calculate. Here it's 5%, so 95% of 37,500, which will give you 35,625. So 35,625, it is less than this. This is more, the output. So it's an abnormal gain. Okay, the difference is 75 liters. Next, the following budgeted information relates to manufacturing company for the next period. You have to be thorough with variance, budgeting, marginal costing, absorption, absorption costing, the ABC costing, all those things, process, everything. Okay, so coming to fourth, here you have to type. Here you don't have an option. Okay, so you have to do a working. Definitely you have to. So you have been given the production, the sales, the fixed production cost and selling cost. The normal level of activity is 14,000 units per product. Use absorption costing. Using absorption costing, the profit for the next period has been calculated as 36,000. So what would be the profit for the next period using marginal costing? Make sure that you know the difference between marginal and absorption costing. What is absorption costing? Absorption costing, they absorb the full cost, the total cost. They take the fixed cost or variable cost. Marginal costing, they only take the variable cost, not the fixed cost. Okay, that is the difference. So what is the starting point? How do you calculate? If you see, here's the production is 14,000. Okay, and the sales is 12,000. That means there is a 2,000 units. There's a closing inventory of 2,000 units because production is greater than sales volume. Okay, by 2,000. Okay, so when the inventory increases, profit under absorption costing is higher than profit under marginal costing. Okay, this if you're not understanding, just put some number, random number, and see what's happening when inventory increases, what's happening to the profit under absorption costing. Okay, so when inventory increases, profit under absorption costing is higher than profit under marginal costing. So difference in profit is, what is the difference in profit? It is the change in inventory into overhead absorption rate per unit. So the change in inventory is what? 2,000, because 14,000 minus 12,000 into absorption rate. How do you use absorption overhead absorption rate? This is marginal costing. Okay. Sorry, overhead absorption costing you can take full. Okay. It will be fixed production cost 63,000 divided by 14,000. Why? Because the normal level of activity is 14,000. You have to take the fixed cost. We are taking the overhead absorption rate per unit. Okay, so fixed production cost, that is 63,000 divided by 14,000. This is the normal level of activity into 2,000 units. Okay, you will be getting 9,000. Okay, so here they have given you the profit under absorption costing is 36,000. They told under marginal costing it will be less. So 36,000 minus 9,000, which is 27,000. Right? Which is correct. Next. So before reading this case study, make sure that you read at least the question so that you understand what the case study is about. Okay. Which of the following factors should not be allowed when comparing the return on capital employed of the two organizations to assess the efficiency of their management? Differences in pressure, difference in objective pursuit, difference in workforce motivation, or difference in geographic areas served. Okay. Which of the factors should not be allowed? So the Eastland Postal Service is government owned. The government requires to provide a parcel delivery service to every home and business in Eastland at a low price, which is set by government. Express Couriers Company is a privately owned parcel delivery company that also operates in Eastland. It is not subject to government regulation, and most of its deliveries are to large business located in Eastland's capital city. You have been asked to assess the relative efficiency of the management of the two organizations. Okay, so definitely it is differences in workforce motivation. Okay, this should not be allowed for. Why? Because the motivation of the workforce cannot be measured in an objective way. Can you measure? Can you put some number that this is the workforce motivation? You cannot. You cannot measure it objectively. Therefore, you cannot compare the efficiency of the management of the two organizations also using this. This one. Okay. Sampling will come. So under which sampling method does every member of the target population have an equal chance of being in the sample? To answer this, you have to know what is cluster sampling, you have to study what is systematic, you have to know what is random sampling, and you have to know what is stratified sampling. Okay, trust me, all this is very easy. It's not hard. It's not at all hard. Okay, this is for those students I'm telling, repeating each time. What is hard and easy for the ones who does not have access to it, who wants to know what is management accounting all about. So through this you can understand. Definitely with the syllabus, the whole concept and all, I'll be coming later. It is random sampling. Randomly you're picking up. Everyone has a chance, equal chance of being selected, right? Next. Okay. What is it? Here also you have to type, and usually this type of questions are a bit hard where you don't have an options. Okay. So a company manufactures and sells one product which requires 8 kg of raw material in manufacture. The budgeted data relating to the next field as follows. Sales, opening, closing inventory is given. Closing inventory and opening of raw material is given in kgs. Okay, these are given in units. So what is the budgeted raw material purchases for the raw material purchases for the next period. So you have to know what is production budget. Production budget is sales plus closing inventory. Make sure that you're writing this down somewhere, okay? Because I'm not able to show you on the screen. So sales plus closing inventory minus opening inventory. That is your production budget. So what is sales? Sales is 19,000 plus closing inventory, which is 3,000, minus opening inventory, which is 4,000. Means opening inventory means the finished goods you are taking, okay? Definitely the units. So it is 18,000 units, okay? So material usage budget you have to take. Material usage budget is production units into material usage per unit. Production unit, just now we calculated 18,000 into what is it? 8 kg. 8 kg. Then you are getting 144,000 kg. Okay. So material purchase budget. Okay. There are three things you have to calculate: production budget, material usage budget, material purchase budget. Okay. So the third one we are calculating now, material purchase budget, is usage, whatever you got just now. 144,000 kg plus your closing inventory minus opening inventory. Okay. That is you are taking in kg, the raw materials. Okay. So 144 plus the closing, which is 53,000, minus the opening, which is 50,000, and finally you are getting 147,000. Okay, this is correct. Next, so you'll be given diagrams like this where you have to select. Okay, which of the following graph depicts the total cost of raw materials for a period? Up to a given level of activity in each period, the purchase price per unit of raw material is constant. The purchase price per unit of raw material is constant. After that point, a lower price per unit applies both to for the unit purchase and also retrospectively to all units already purchased. Okay, this could be something hard. Is it first, second, or third, or fourth? Okay, let me give you the answer. The answer is fourth one. Okay, I'm sorry, the answer is the third one, not fourth one. Okay, the raw material cost are cost, okay, which change with the activity. So the line has to start at the origin. Okay, definitely it's not the first one. Okay, so it means it's either this, either this, or either this. Okay, because raw material cost cannot change when there's no cost. Okay, definitely there has to be cost. It changes with the activity. So that means if activity is zero, raw material cost will be zero. That's why it have to start. Origin have to start at zero. Okay. So as there's a fall in price per unit, the line has to have a vertical drop part way through when there's a fall in price. So it's definitely not the second one also, because they are not showing any fall in price. They told there's a fall in price. So that means it has to fall down like this. I hope you can see that line where it's falling down. So it's third or fourth. Okay. Part way through, it will fall down. There's a vertical drop. Okay, vertical it will fall down. So the correct graph is graph 3, as the line after the fall in price would also go through the origin if it is extrapolated, which shows the cost is variable and will increase proportionally with activity. Again, it will increase because with activity. Okay, there is an issue with this question because the answer what they have written is the answer is graph 4, but when you're putting graph 4 is showing wrong, it's graph 3 because it's confusing, right? Both can be correct because both are depicting the same thing only, a fall and then an increase. But for this answer, since this is 3, we'll give third one. Next, which two, that means you have to select two. Okay, which two of the following are benefits of budgeting? Establish a system of control, fulfills legal reporting obligations, helps coordinate activities of different departments, or it is a starting point for strategic planning. Benefits: one is it coordinates, the other one is establish a system of control. Okay, next. So here, for such questions where you have to select which statement is true, whether it's first or whether it's all or none, you have to be very careful. because sometimes what happens is you might miss out the other points. Maybe the first one looks true and you don't, So the following statements relate to the participation of junior management in setting budgets. You see how many times budget has been asked. So which of the following statement is true? It sets up the setting of budget, speeds up the setting of budget. When you're telling the junior management to participate, it speeds up the setting of budget. No, it does not, because junior management will make a lot of mistake, will take time, so it does not speed up, it slows it down. If you're taking a senior management, yes, you can say it speeds up. So first one is not true. Second, it increases the motivation of junior managers. Yes, because you are taking junior management to set budget, they will be motivated. So two is correct, but let us read the third one. It reduces the level of budget paddling. What is this budget padding? Sorry, make sure you know it, okay? But answer here is too only. Next, again, what is the company's return on investment? Capital employed 200,000, cost of capital 12%, resulted income 36,000. For this reason, you have to know all the ratios, how to calculate. Okay. So how do you calculate this thing? What is the return on investment? So the residual income is what? Residual income is operating profit minus interest into capital employed. Operating profit, we don't know. We have to find the operating profit first. Because why? Return on capital employed, you cannot just find it out. You have to find something else. That is operating profit. Because formula is operating profit divided by capital employed. So capital employed, we have 200,000. Operating profit, we have to find out. We have been given cost of capital. We have been given residual income. But we cannot use residual income to find return on capital investment. So what do we have to do? Find the operating profit. How? Residual income is what? Operating profit minus imputed interest into capital employed. So operating profit, we don't know. So that means 36,000 equal to, because residual income is 36,000 plus, sorry, operating profit minus interest cost of capital. Okay, that is 12% into capital employed, which is 200,000. So make operating profit the subject of the equation. That will lead you to, so operating profit will be equal to 36,000 plus 24,000, because 12% of 200,000 is equals to 60,000. Okay, so now you got the operating profit as 60,000. Now use the 60,000 in the formula. 60,000 divided by 200,000 and find the return on capital, which will be 30%. Next. Okay, what is next? A company which two of the following could have caused the variance? So this is about variance. Okay, a company has calculated a 10,000 adverse direct material variance by subtracting its flex budget direct material cost from its actual direct material cost for the period. Which two would cause the variance? Units sold being greater than budgeted, an increase in raw material usage per unit, an increase in direct material prices, units produced being greater than budgeted. This is an adverse, okay, you have to think from an adverse point of view. Direct material variance, adverse, what does it mean? It means there is an increase in direct material prices. One of the answer is this. If you see, you will not be given any marks until you select both. Both has to be correct for you to get the full mark, otherwise you will get 0. Not even 1, 0. So increase in direct material prices, because material price increase, this becomes adverse. Okay, it's about direct material variance. What's the next? Okay, next is, see, unit sold, unit produced, this does not come. We are talking about direct material. So next is an increase in raw material usage per unit. Okay, next. What is next? 13. Okay, what was the fixed budget profit for the period? A company has recorded the following variance: sales, volume, sales price, and total cost. So standard profit on actual sales for the period was 120,000. You have to know the calculation. Okay, You have to know it. So the difference between the fixed budget profit and the standard profit on actual sale is the sale volume variance. Okay. So fixed budget profit is equal to what? Standard profit on actual sales plus sales volume variance. Standard profit on actual sales, it is 120,000 plus sales volume variance. What is the sales volume variance? It is 10,000. Adverse. You add both. Okay. Because plus sales volume variance, which is 10,000. 120 plus 10, which is 130,000. Okay. Definitely for the first time students who is just seeing this will not understand what it means. You have to study budget for it. Next. Which of the following are suitable measures of performance at strategic level? Return on investment, market share, number of customer complaints. Okay, so it's definitely return on investment and market share 1 and 2. Customer complaint is not at strategic level, it is day to day. Okay, it could be at operational level or tactical level. Next. Which two of the following are feasible values for the correlation coefficient? Okay, feasible values. The question asked feasible values. So one is what? 0 minus 0.94. Okay, why are these two feasible values? Because they are in that range, because the correlation coefficient lies between the values of -1 to +1. So it cannot be less than -1, it cannot be greater than +1. They are not feasible. So feasible has to be between +1 to -1. So 0 and -0.94 falls in that range. That's why this is feasible. Okay. Next. A company's operating costs are 60% variable, 40% fixed. Which of the following values would change if the company switched from standard marginal costing to standard absorption costing? You have to be a pro at marginal costing and absorption costing to answer this question. Okay. So variable overhead efficiency variance, sales volume variance, direct measure efficiency variance, 6 overhead variance. The question again asked which of this would change. Okay. Which of the variance values would change if the company changed from marginal to absorption? Is it variable overhead efficiency? Is it direct material or fixed overhead? It is sales volume. Sales volume. Why sales volume? Because absorption and marginal has to do with sales volume only. Okay. They have a link with sales volume variance. Both of them. So if we change from this to that, sales volume variance will change. Next. ABC company has an manufacturing capacity of 10,000 units. Flexed production cost budget of companies as follows. Capacity, total production cost at both 60 and 100% is given. What is the budgeted total production cost of the company operates at 85% capacity? Okay. What would it be? What do you have to do? When you have to do this, what do you have to use? Sometimes you have to know what method to use. You have to use high-low method here in this case. Okay. So first find the variable cost per unit. What would be the variable cost? Okay. Just find the difference between these two and divide it by what? $10,000 minus 6,000. Why 10,000 minus 6,000? Because manufacturing capacity is at 10,000. 6,000. Why? Because 60% of 10,000 is 6,000. Okay. So when you're dividing like this, you will get 0.96. Okay, the variable cost per unit. Then for the fixed cost at the highest output level, what is it? Highest output level 15 to 20 minus the variable cost per unit is what? 0.96 into 10,000 units. Okay, that will give you 5520. Now at 85% capacity, the budgeted total production cost will be what? 85%. 85% capacity means 10,000 units is the capacity. Out of that, if you take 85%, it will be 8,500 units. That 805,000 units multiplied by the variable cost per unit, which we got previously as 0.96. Okay, from that you add what? You have to add what? 5520. Why? Because 5520 is the fixed cost at the highest output level. You have to add that together total production cost at 85% capacity, which will be 13,680. So the answer is 13,680. Next, IRR of the project. These things you even have in the financial management also, but there you have to calculate. It's not just like this. It will be given. Okay. Using an interest rate of 10%, net present value has been currently calculated at 50. If the interest rate is increased by 1%, the net present value of the project falls by 20%. What is the IRR of the project? Okay. IRR means cost of capital where, or the percentage where your net present value falls to 0. That's what IRR means. Okay. Okay. So here, just listen carefully. Okay. Make a note down. I'm going a little slow. Maybe some of you are writing notes. So at 10%, the net present value is 50. So they told if it increases by 1%, net present value falls by 20. By 20 means it will be 30. At 11%, net present value will be 30. Okay. So increase it by another 1%, which is 12%. At 12%, net present value will fall to 10 by another 20. Okay. So if it falls to 10, so definitely it has to be more than 12%, because if it's 13%, it will fall to it will fall below 0. Okay, but we want at 0. So the IRR is 12.5%. More than 12%. Okay. It could be 20% also. It could be 11.7. No, not 11. It could be 20% also. You might say, some of you might say, no, why not 20%? See, if it's at 20%, net present value will fall to negative. We don't want negative. We want when it's at 0. Okay, or closer to 0, that range. So 12.5%. Okay. Next. Make sure that you are doing all this within time. You have to practice, keep on practicing this. Even if it's multiple choice question, don't take it as a joke. Okay, this takes time. Just look at the time now. Okay, almost 32 minutes we have spent, and we are not even covered with half of the question. Okay, so now a factory consists of two production cost center P and Q, two service X and Y. Okay, it has been estimated that the service cost does work for the other cost centers in the following proportion. The proportion has been given. The reapportionment of service cost center cost of the cost center fully reflects the above proportion. Okay, after the reapportionment of service cost has been carried out, what is the total overhead production cost for center P? So we are only worried about P. Okay, so let us do this. It's starting with 95,000. From here, reapportionment of from Y. Okay, they will take 30% of 30,000 Y. They told percentage of service cost center Y2. Okay, first we have to what? Eliminate the Y. Okay, if you see here, It has been eliminated. So first let's eliminate the Y. So they are taking 30%, okay? We are not worried about Q. We are already taking P. So 30% of 30,000. This is for Y. Okay, on that 30,000 we are taking, which is 9,000. Add it with 95%. Then reapportionment of X. Okay, so X, if you see, it is 50%. Okay, 50% of what? Of 49,000, not 46,000. Why 49,000? Because say this percentage of service cost center Y2. So Y will take 10% to X. Okay, so 10% of 30,000 is 3,000, which will be added to X after that only. So that's why 49,000. So 49,000, 50% you have to take. First with the service center, then you are taking with the production. Okay, so which will be 24,500. So now add 95,000 plus 9,000 plus 24,500. It will lead to 128,500. Okay, next. A company always determines its order quantity for a raw material by using the economic order quantity, which would be the effect on the EOQ and the total annual holding cost of a decrease in the cost of ordering a batch of raw material. EOQ, will it be higher or lower? Annual holding cost, will it be higher or lower? Do you know the formula, first of all? Okay, so if you don't know the formula, write it down. EOQ formula is equal to square root of 2 into CO into D is demand, okay, divided by CH, that is the cost of holding, okay. 2 into cost of ordering into demand divided by cost of holding, okay. So take the square root of the whole thing, that is the EOQ formula, okay. Where CO, that is CO is cost per order, D is annual demand, CH is cost of holding one unit in inventory. Because when the formula is there in front of you, you know, or even the textbook is there, okay. So we know that if the cost per order decreases, that okay, cost per order is in the numerator. If that decreases, the value will decrease, EOQ will decrease. So the EOQ will be lower. Because it will decrease in the cost of ordering a batch of raw material. This comes in the numerator. So EOQ will be annual holding cost. Okay. What happens to annual holding cost? So if EOQ is lower, amount of inventory held in stores also will be lower. So the annual holding cost will also fall down. It will be lower. First, you have to get this correct, EOQ. Then only you can write the annual holding cost. You see, sometimes you have to answer in order. Next. Again, calculation. So you can see there are lots of calculations in MA, management accounting. What was the total value of 2,000 units transferred to finished goods warehouse last month? Okay. So a company which operates a process costing system had work in progress at the start of last month 300 units valued at 1710, which was 60% completed in respect of all costs. Last month a total of 2,000 units were completed and transferred to the finished goods warehouse. The cost per equivalent unit of cost arising last month was 10. The company uses FIFO method for cost allocation. FIFO, WAFCO, LIFO. Okay, make sure you know it. So basically here you are valuing your goods, okay, your stocks. So how do you do that? You have to find out opening work in progress plus units started and finish is will be equal to your output. So your opening work in progress is 300 units. It is this, okay, plus units start and finish. We don't know what is the units start or finish. That's a balancing figure which you have to find out, equal to output. Output is 2000. So 2000 minus 300, 1700, the balancing figure. Now we are finding valuing, okay. So value brought forward in the opening work in progress was what? It was valued at, do it in a vertical order, okay, 1710 plus opening work in progress What is the opening work in progress? How will you evaluate? It will be 300, okay, units, 300 into $10, because they told that the cost per equivalent unit for cost arising last month was 10. So first it is FIFO, okay, so first in first out, 300 into 10 into 40%. Why? Because they told which was 60% complete in respect of all cost. Okay, this is to complete the opening work in progress. We need another 40%. So for that 40%, 300 into 10 into 40%. Then the units started and finished. The finishing goods was 1,700. Just now we calculated it into $10, because we have been only given one price, which will be 17,000. Add all, it will be 19,910. Okay. Next, I know this is a bit complicated when I'm saying rather than me showing it. I will make sure that I am able to show you on the screen next time. Okay. A company uses marginal costing. The following variance occurred in the last period when the actual net profit was 40,000. So you have been given what was the budget and net profit for the last period. So we all know the formula. Okay. The actual net profit was 40,000. Now you have to go back. Take this 40,000, add 900 with it, material, because it is adverse. Okay. So when it is adverse, you are adding. When it's favorable, you are deducting. Okay. Minus 1,000, the favorable labor. Okay. Plus 700, because adverse. Then minus 500, then minus 900. You are getting 39,200. Definitely it will be this, less than 40,000. The budgeted period for the last period. Why is it? Because we have more favorable than the adverse. We are deducting more than adding. Okay. Next. Identify whether each of the following statements about use of big data analytics in organizations is true and false. You have to learn what is big data analytics. It's very easy. Okay, it's the theory part. So it helps to better understand customer behavior and preference. True. It helps to analyze efficiency of business process in real time. True. Both are true. Next. Sometimes remember guys, both could be true, both could be false. It does not mean that because true and false is given you have to one will be true or one would be false. No, sometimes both could be true or sometimes both would be false. So under which of the following labor remuneration methods will direct labor cost always be a variable cost? Differential piece rate, day rate, group bonus scheme, or piece rate? You have to know the different remuneration methods too. Okay. What is it? It is piece rate. It's a variable. Always be a variable. Why? Because you are paying according to the piece they are doing, according to the piece, according to the output they are producing, you are paying them. Okay. So direct labor cost will always be a variable cost under this remuneration. Whereas the other three could be fixed or variable, may change, right? Next. Okay, so this is something which, okay, looks like a big thing. So which of the following combination of profit and losses for the 2 months is consistent with the above data? Okay, you have been given for the 2 month. Both under absorption costing, profit or loss for both month. If it's a loss, it will be in bracket. If it's a profit, without bracket. Okay. Which out of this is true? So let us see. A company manufactures and sells single product in 2 consecutive months. One levels of production and units has occurred. Opening inventory for month was 400. Profit or loss have been calculated for each month using both absorption and marginal costing. Okay. So let us see. Now, How are you going to do this? You have to find the closing inventory to get that profit or loss. If you're not finding closing inventory, you will not be able to tell. First, you have to find the closing inventory for both month. Okay, so starting with month 1. Okay, it is not that you have to find a closing under both methods, absorption and marginal differently. No, only once. Okay, so first is opening inventory, which is 400 for month 1. First find for month 1. Okay, then only you can find for month 2. So opening inventory is 400. Definitely the closing inventory for month 1 will be the opening inventory for month 2. Okay, so month 1 is 400 plus the purchase, which is 3900, minus your sales, which will be 500. So the closing inventory is 500 for month 1. That will be the opening inventory for month 2. Okay, so 500 plus 4200, because production minus sales 4200, which will give, sorry, 4400, which will give you 300. So the closing inventory for month 1 is 500, for 2 is 300. Okay, so in month 1 you see the closing inventory is higher than the opening inventory. Why? Opening inventory was 400 in month 1, but closing inventory is 500. It's higher. It's higher than the opening inventory. What does it mean when the closing inventory is higher than opening inventory? Absorption costing profit will be higher, okay, than the marginal costing profit. Okay. Then month 2, opening inventory was 500, closing inventory is 300. It is less. Okay, so that means the marginal cost profit will be higher than absorption costing profit. So we'll see which one out of this 3 is correct. First one is this. Month 1 is 200 and it's a loss. You have to see both. Here absorption costing profit will be greater. Okay, this is correct because this is 200, this is loss, but here this is greater, this is less, 3200. This is less, sorry, for month 2. It cannot be, because in month 2 they have to produce less. Under absorption costing profit will be lower than. So first one is out. Second one, here it is a loss, here here they are making a higher profit. So here also it's wrong. Here, okay, because absorption costing profit has to be higher than absorption marginal costing in month 1. So if you see month 1, here it is higher than this. Okay, here's a profit and loss. Let us go to month 2. Month 2 profit has to be lower than marginal costing. So here it is 3200, it is this one. Looks like third is correct. Let us go to the fourth one. Here it's a loss, here it's a gain. So definitely this is out. So the third one is correct. Okay. Next. What is it? The following statements relate to advantages that linear regression analysis has over the high-low method in analysis of cost behavior. The reliability of the analysis can be statistically tested. Yes, it takes into account all the data. Yes, it assumes linear cost behavior. No, it's only 1 and 2. Okay. Next. What is it? A company operates a process in which no losses are incurred. The process accounts for last month when there were no work in progress as follows. So cost arising. The closing VIP was complete to the same degree for all elements of cost. What was the percentage degree of completion of the closing WF? WIP. Here also working is required. So cost per unit of finished output. Okay. What is the cost per unit of finished output, which is 480,000 here? This divide by 10,000 units, which is $48. Cost per unit you want to find out finished output. Then we are finding the cost per unit of closing work in progress, which is 144,000 divided by 4,000, which is 36. Okay. So what is the percentage completion of closing VIP? Definitely the closing, sorry, the finish output divided by the closing, which is 48, sorry, 36 divided by 48 into 100, which is 75%. Okay, next. So definitely you can see that you will need more time. You are taking more time when calculation occurs and such. Where theories are there, you can just, it takes less time. Okay, so make sure that when you're stuck with a calculation, don't spend so much of time on that. Just skip it and go to the next one. Finish all and you can come back and do it. Which of the following would not be expected to appear in the organization's mission statement? The organization's value and beliefs, products or services of the organizations, quantify short-term goals, organizations to achieve, and organization's major stakeholders. Okay, which one is it? It is the quantified short-term target. Because mission statement is something like, it's like a long-term goal for your company. What do you want to see your company? What's your mission? Short-term goals and all is not there in the mission statement. Okay, so definitely beliefs and value, they are like something long-term. Product and service, it will be there because your company is based on that. What product and services, and their major stakeholders also. Next. Okay, an organization operates a piecework system of remuneration but also guarantees its employees 80% of a time-based rate of pay, which is based on 20 per hour for an 8-hour working day. 3 minutes is the standard time allowed per unit of output. Piecework is paid at the rate of 18 per standard hour. If an employee produces 200 units in 8 hours on a particular day, what is the employee's gross pay for that day? This type of question could be a little complicated if you don't have a calculator and a paper in front of you to do the workings. Okay, a lot of calculations are there. So what is it? It will be 200 into, because 200 units into what? Into 3, because 3 minutes is the standard time allowed per unit of output. Okay, so 200 into 3, which is 600, or you could take it in terms of hour if you want to take 600 minutes or 10 hours. Okay, because 600 divided by 60, 10 hours. Okay, you want it in terms of hours. Why? Minutes will not help. Convert minutes to hours. Because when you're taking a gross pay, just look at it. The piece work is paid at the rate of 18 per standard hour. You cannot take minutes. This is why you have to be smart enough to know that when your minute is given, convert it to hours. Because look at it. To multiply with 18, the standard hour you need is an hour, not a minute. So 600 minute will be 10 hours. So 18 into 10 is 180. Next. Right? All these questions will be there under absorption, over absorption and all. Okay. A company uses an overhead absorption rate of 3.5 per machine hour based on a 32,000 budgeted machine hour for the period. During the same period, actual total overhead expenditure amount to this and 30,000 unit machine hours were recorded in actual production. By how much was the total overhead cost, overhead under or over absorbed for the period? Was it over absorbed or what is under absorbed? Okay, for this you have to know the amount. Either it would be 7,000, either it would be 3875. So this will make you, this is a hint that either you have to get this or that. If you are getting an amount which is not this also, not that also, that means somewhere you are wrong. You have to adjust your calculation. It's a hint. Then comes under and over absorption later. Okay, so first let us find out the amount. What is it? What is it? 30,000 into 30,000 machine hours into how many hours? 3.5 hours. That is the overhead absorption rate. Multiply it. It will be 105,000. That is the absorbed overhead. What is the actual overhead? Actual overhead is this. So compare it. The difference is 3875. It is under or over absorbed. See, actual absorption rate is more than the absorbed. That means in the absorb, it hasn't absorbed that much, but actual is more. So it will be under. Okay, it is under absorbed. When your absorption is, sorry, under absorbed. When your actual is more than the absorption overhead, that means it's under absorbed. Okay, and vice versa for the other way around. Next. Which two of the following methods relating to managerial accounting information are true? It may be presented in a monetary, non-monetary terms. It is produced for parties external to organization. No strict rules govern the methods by which information is presented. There is no usually a legal requirement for the information to be produced. So it is this. Why? Because the others are for the financial accounting. Okay. For financial accounting, you have to produce for the external parties. That's why it is audited. You make balance sheet at the year end, financial statements and all. It is there's a legal requirement. We follow IFRS and all those things. And you can present it in monetary or non-monetary terms. But management accounting, no strict rules. Why? It is internal, inside the organization you are producing. Why are we doing variances, budgeting, all those things? It is for inside the organization. It is not to be produced for the external stakeholders. Okay? That is all management accounting all about. Okay? See, when I'm trying to go to the next, it will not go. Why? Select two answers. Two answers needs to be select. What is the next one? It is the first one. But where is financial statements when you're making income statement for year end? What are you doing? Monetary terms you're producing. But management accounting, anyway, you can produce. Okay. Next. What is it? A company sales in the last year in this three market as follows. So in pie chart represent the proportion of the sales made in each one. What will the angle of the selection represent in market 3? So market 3, it is simple, right? Just take 51,000 of the total. So 51,000 divided by 300,000, which will be 61 degree. Next. The number of daily complaints to local government office has mean of 12 and standard deviation of 3 complaints. What is the coefficient of variation as a percentage? So mean is 12, standard deviation is 3. How do you calculate this? It is your standard deviation divided by mean. So standard deviation is 3 divided by mean, which is 12. So 3 over 12 into 100, which is 25%. Next. Definitely economic order quantity, EOQ, will be there. Okay. You have found what is the economic order quantity for the inventory item to the nearest whole unit. When you are giving an answer, if your answer is correct and you are not giving it to the nearest whole unit, you will be marked 0. It has to be to the nearest whole unit. Okay. Not even one mark will be given to you. So just use the formula of EOQ. Okay, so purchase price of inventory item is 25 per unit. In each 3-month usage is 20,000 units. Annual holding cost is of 1 unit 6% of its purchase price, and the cost of placing an order for an item is 20. So what do? It is 2 into 20 because cost of order. Okay, so 2 into 20 into 80,000 because 80,000 is what? Annual demand. Okay, it is annual demand because they told in each 3-month. So that means 3 months quarterly. So for each 3 months, for one quarter, it is 20,000 units. Annual demand means for the 12 months. So you have to take 20,000 into 4 because there will be 4 quarters. Okay, 3 month, 3 month, 3 month, 3 month. So 20,000 into 4, which is 80,000. Okay, we are finding annual demand. So it is 2 into 20 into 80,000. Okay, divided by 25 into 0.06. Why 25? Because purchase price is 25 per unit. And why 0.06? Because 6% annual holding cost. Okay, so take the square root, it will be 1.461. Sorry, 1461. I'm sorry. Next. 35. The result of a chemistry examination are normally distributed with the mean score and standard deviation. What the percentage probability the student will score more than 18? Okay. So here, what are you doing? You are finding the Z score. What is the formula for the Z score? It is the amount of score you want to find, which is 80 minus the mean. So mean is 56. 80 minus 56 divided by 12 because standard deviation is 12, which is 2. So from the normal distribution table, you have to find the probability of 2. Okay, so when you find the probability of 2, okay, here I don't have the normal distribution table, make sure that you have it. It will be 0.4772. Okay, and you have to deduct this You have to minus it from 0.5, okay? Because you want to find probability of scoring more than 80. Okay? So from 0.5 you have to minus the probability, which will be 0.0228. If I take, okay, and this is in terms of percentage, so it will be 2.28. Wherever it is told to round to the nearest whole figure, only round up. Otherwise, don't. Okay. Probabilities and all, you should never round up. This is coming to section B. Okay. You can see that you have been given a long background and you have been given so many tasks to do. 3 tasks will be given. Okay. 6 questions are there. Oh no, I think 3 questions are there. Sorry. Okay. So this one question itself is 10 marks. You can see. So from here onwards, section B questions, I will be doing it in the next video. Okay. So I have finished all the questions of section A. This is how our management accounting questions will look like for all ACC students who are planning to do management accounting. Okay, section A. And section B will be like this. You will be given a long background like this and you'll be given a lot of tasks to do. Okay, which will be plenty big enough. It will take time, so we'll proceed from here in the next video. Till then, don't forget to subscribe to the channel, because the videos I will be doing the questions for all the SSCA papers. Okay, I told the all 11 papers excluding the AAA and the APM. The reason why I excluded is because I didn't do those papers. I didn't take those papers as an optional paper. So I don't want to teach something where I don't have experience. Okay, when I'm not exposed to that paper, I don't want to give something. Definitely, if someone better is there in teaching AAA and APM better than me, do let me know then, so that I can, if you want to upload videos on that to benefit others, I would include it. If anyone is willing to do that, let me know. I will put up your videos on my channel. Thank you and take care.